we've got some more Houston Life. And folks, whether you like it or not, the deadline to file your taxes is now less than 2 months away. And if you're like me, shuffling through piles of documents or drawers full of receipts,
I've already done it.
You'll probably want to listen up.
To help us prepare for tax day, we have certified financial planner and president of the Shakiba Group. We have Trevor Shakiba, along with certified public accountant Kevin Jenkins. Guys, thank you so much for coming in.
Thank you.
Talking about the dreaded tax day, which is not actually April 15th this year, is it?
The 18th.
So you get a couple extra days.
Yeah. Couple
more days for you, Derek.
Okay, yeah. Procrastinate it right here. Well, Kevin, welcome to the show.
Thank you.
This is your first time here. Trevor, we love when you come on. We especially love when you play game show host.
Yes, as do I.
And we're going to start out with, good at it, we're going to start out with a little game today. So
yes.
you want to ask us a few questions?
I do, and first thing I want to do is just update the viewers from the competitive landscape. We did this last time. The current results are Jennifer 1, Derek 0. So this is your opportunity, Derek, to bring it even, all right? Question number 1, true or false? You should wait as long as possible before gathering your documents and... Derek.
I mean, false. Duh. You should get an early start, right?
That is correct. 1 point for you. Don't procrastinate. You got to get organized.
Because I've already at least gotten all my stuff together.
But, you know, the thing is here is you really want to get your documents to your CPA or tax professional. Allow them to do their job and find ways to save you money. Don't give it to them on the 16th.
Well, and Kevin, you were telling us before the show that rather than everyone saving their stuff until the day they come and meet with you, you prefer to have people send you stuff in advance.
Oh, yeah, absolutely. I would love to have clients give me their information early. That way we can look at potential areas to save you on your taxes rather than be pushed by the deadline.
So they should do their homework, do their paperwork, send it to you, and then sit down.
What are some of the documents, though, that you need? I mean, I think everybody knows, okay, you need your employer information from your job.
W-2s, your 1099s. But if you have a small business, it's important to get all those expenses together. You know, that takes us the most time rather than just the documents that the IRS already has.
Yeah, if you itemize, you know. All right, folks.
And Trevor, with investments and stuff, there's also documentation that has to go over too, right?
You absolutely need your investment statements. They come at different times, so don't get too anxious. You need all of them, but sooner is better than later.
Absolutely.
Save everything, throw it in a plastic bag, and mail it to these guys. Okay, question number 2.
Second question, if you file an extension, you can delay paying your taxes.
False.
That's right, it's false. Unfortunately, an extension to file is not an extension to pay. The IRS wants that money in April, and you might be subject to penalties and interest if you don't pay that in.
I mean, how massive is the penalty, though? I mean, it's not something that's going to bankrupt people, right?
No.
Isn't it a serious question? Oh, wow, I'm getting so excited here.
Very passionate about taxes.
People are wondering. People must wonder.
Derek is wondering how late he can pay.
Live TV, folks. Anything can happen. No, seriously, how big is the penalty?
The failure to pay penalty is 0.5% per month for a maximum of 25% of the amount you owe.
Well, that's nothing.
Okay, but if you pay and if you underpay, are you still penalized?
You're paid on the underpayment until you file with your extension.
Okay, folks, let's move on to the third question before I break something else.
You never want to give unnecessary dollars to Uncle Sam. I think
Absolutely.
that's the key.
Yeah.
Amen.
So here we go. 1-1, I believe, although the bell following threw me off, but I think it's 1-1. Question number 3, true or false? You have until April 18th this year to fund your IRA accounts for last year. Jennifer.
False.
I also would say false, but she...
Because I thought you had to do it by December 31st.
No, there's an extension this year. Isn't it like
Really?
March?
Well, it's actually true. You have until the deadline of this year to get your IRA contributions in for last year. Remember, if you're under 50, $5,500, and if you're 50 or older, you get a catch-up contribution of $6,500. This is one of the easiest things to get money in for last year to lower your taxable income.
So this is why you should do all this stuff in advance to see,
Correct,
hey, do I need to shift some money over?
Save some money, apply it to last year.
Wait a minute, Kevin, let's go over this one more time, just to be clear. So if I haven't contributed to my IRA, I have until April 18th to put up to $5,500 in?
If you qualify, there are certain income limitations, of course, but yeah, that qualifies. So.
Is this just for IRAs, or can you also do this for your 401k?
It's just for IRAs.
Okay, 401k, the deadline was December 31st, right?
You got that. Half a
And
point
if you
for
are
that.
covered by a 401k, you need to check if you can also contribute to an IRA.
No, this is great. I mean, I love learning new stuff like this. Okay, next question.
Now, before we do this is going to be the bonus round. So this is for all the marbles right here.
Yeah.
Okay.
You're giving us marbles?
Oh, goodness.
That's our prize, marbles.
This should be a layup.
Okay.
You should use last year's return to help you plan for this year's return.
Absolutely true, especially if you own a business, because then your quarterly tax amounts are determined by last year's income levels.
Absolutely.
Boom.
Yeah.
I'm scared for my job now.
Yeah. The winner.
Yeah.
1-1.
Welcome, Jennifer.
When did you turn into a CPA?
Because I know that I happen to own a business, and I know that as well. Yes.
There we go. Fantastic.
So wait, that means Derek won.
Where are my marbles, guys?
Yeah.
Okay, enough of the game show. Seriously, let's continue talking about this because people, as they are preparing, other
Congratulations,
issues.
by the way.
Yes, other issues may come up in preparing for taxes. Before we talk, though, about other ways people can prepare to get their taxes done, Kevin, what's the strangest thing you see people try to deduct on their
We were
taxes?
talking about this before the show.
It fascinates
Yeah.
me.
A lot of people will try to deduct their pet expenses, pet insurance, or I have had people try to claim pets as dependents, which is, of course, not allowed.
Okay, that is ridiculous.
Yeah.
I think it's
Sometimes you
hilarious.
spend more on your pets than your children, but still not allowed.
Yeah.
Okay, but all kidding aside, though, when it comes to, I know a lot of people will take a standard deduction, but for people who are maybe homeowners or who have a business and they choose to itemize, your advice, Kevin, is that people shouldn't be afraid of taking the deductions they deserve.
Yeah, we all hear about these potential IRS red flag areas. You know, this year they're going to crack down on charitable contributions or home offices, but I don't think if it's a legitimate deduction, it's worth leaving tax savings on the table, you know, just because you're scared of a potential audit.
Yeah, I mean, home office used to be one of those triggers, right?
I was going to say, yeah, I mean, I thought home office, I mean, there's so many tricks with that one.
Right, but if you can back it up, I mean, the worst that can happen is you get audited, and you give the IRS your proof, and they move on with their lives.
So I can't claim my little office space in my apartment that's about this big.
No, but a lot of, I mean, as we move into the future generation of the workplace, right, a lot of people these days are working
at
from home.
home.
But for many years, people weren't taking those deductions because they were afraid it would trigger an audit. Not true
it's
anymore, right?
more commonplace now, and the IRS knows that, so they're going to be more lenient on that if you claim it.
You could start a business at home, Jennifer Broom.
Okay,
Like a
for my
face
little
painting
office
business
space.
or a dog
and take off
walking
2% of my rent, right?
And how do you guys, I mean, because obviously, Trevor, we know that you handle people's money and you make it grow and all of that. What are some of the things that, you know, both of you, advice that you both could offer when it comes to tax time?
Well, I think the first thing to really be aware of is you need to be proactive. So a lot of what we've been talking about right now is being reactive for last year. But in certain situations, you actually want to accelerate taxes and think long term. And so that's where having a good CPA with a financial plan makes a big difference.
Accelerate taxes? What do you mean by that?
So potentially saving into a Roth IRA or Roth 401k after tax, maybe even looking at conversion strategies so you're paying less taxes at retirement.
You're going to pay the tax at some time. You just want to find the most beneficial point to pay it.
Awesome. Guys, we are out of time.
Man.
This has been so much fun. But
Congratulations, you finally won.
1-1.
Yeah, you redeemed yourself.
It's a compliment, but there's like, you finally won. That's what I call a nompliment, folks. Listen, once your taxes are in order, hopefully that means a giant refund is coming your way. And once that happens, you can connect with the Shakiba Group to start saving and investing that refund by visiting their website, theshakibagroup.com. Trevor,